From the floor of the CME Group, this is Danny Riley on today's Cash Close. And no, I'm not retiring, and no, I'll be here doing these videos. I'm not leaving you guys. The name of this video is Oil Firms and Greece Up 10%. The high of the day in the S&P came in at 2042.80 just now. The low came in at 2130 early in the morning. And last, we're 2042.10. We're up 25 handles. That's like up over 70 handles in 2 days. Total volume, 1.7 million minis trade and 3,000 big S&Ps trade in the pit. MOC, the MIM was showing like 400 million to buy, and the actual MOC came out buy 900 million. Wow. I told you they put that money back to work. They sold them on the last day of January, and they're putting that money right back to work on the first days of February. Tomorrow we've got the MBA Purchase Applications. We've got the ADP Employment Report. We have the Gallup U.S. Job Creation Index. We have the Treasury Refunding Announcement. We have a 3- and 10-year note announcement, a 30-year bond announcement, the PMI Services Report, Jerome Powell speaking from the Fed, the ISM Non-Mfg Index, the EIA Petroleum Status Report, Loretta Mester speaking, and earnings before the bell from GM, HUM, MRK, and RL. And after the bell from LNC PUR and YUM. Wow. I'm sure there's a lot more names reporting than that. Now look, oil jumped almost 20% in 4 days. And the Greek government kind of succumbed. They dropped their calls for all these big write-downs on their foreign debt. And obviously, a lot of this news started filtering in yesterday, and the market reacted in kind yesterday, and it reacted in kind today on the upside. Now, I said that earlier in the day when we were trading, I saw the highs of the day, but I was off by 2 or 3 handles. And then late in the day, when the S&P got down to the 2033 level, I saw something that I consider very, very valid thing. I saw 3 separate buy imbalances all at the same level late in the day after the S&P sold off. We got long, the S&P rocked higher, so we got a good level, we got a good trade off late in the day. More than made up for the early day loser. Now look, I want to talk a little bit about the false starts and how the mutual funds use the shorts to their advantage. And really, this is exactly what I think has happened here over the last couple of days. Everybody gets short, the markets look horrible, the S&P makes a lower low, and then what does it do? It starts to short cover. And it being the first trading days of February, what happens then? The mutual funds start to buy cash. They know that they've got cash to buy early in the day. And you know what? That's what I think firms the market up. I'm not saying that they're front running or they're buying S&Ps or anything, but I think somehow once those orders get into the pipe, the market starts to firm up, and that's exactly what happened today. Now, these false starts, I believe, is what happens is that once the short covering starts to come in, the mutual funds just start to come in and they just use the shorts to grease the upside. And that's exactly what they've done here in the last couple of days. Now look, they ran the sell stops under 1988, and it's my call that they're going to run the buy stops above 2048. And at the end of the day, I still think we're in some type of goofy trading range, but I don't know if it's from 1970 to 2060 or it's something like that. But I do believe that if we start to get above these old recent highs that we've seen, we hold above there is a likelihood that we can get back up toward 2100 in the S&P. That said, the volume was a little lower today, but obviously the buyers are back, and I'm going to leave it like that, and I'll see you tomorrow on the opening print.